All right, guys. So, welcome to the webinar. My name is Brandon Stringer. We're here to educate you and give you the correct tools and the right knowledge to trade and benefit in the forex market. So, who are familiar with stocks and who is not? Who's ever using the question and answer box? Just talk in the chat box, Kevin. You're using the question and answer box. Use the chat box to talk so I can actually see your questions. But who's familiar with stocks? Who understands stocks or has a good familiar feeling what stocks are? Like, who understands what stocks are? Give me a yes or a no. You say me, I do. Okay. Cool. Perfect. So a lot of people are familiar with stocks. So basically, stocks, you're putting your money, and you're investing into the market, you're trading in the market, and you're basically saying, is the value of the company going to go up or is it going to go down? That's pretty much what you're doing in stocks. And you're banking on you're pretty much in options, you're doing that. In stock, you're basically hoping that you put some money into the company and the value of that company rises, right? But my apologies. With Forex, you're basically saying, is the value of a currency going to go up or down against another currency? So I'll give you an example. Let's say you're always trading in pairs. So let's say that Euro versus USD. And let's say that you're basically saying, is Euro going to be stronger against the USD? Or is the USD going to be stronger than the Euro once you make that trade? And let's say that you choose that the Euro is going to be stronger, and that means you're saying the market is going to go up. That means that as the market goes up, with that trade you make, you're making money. But let's say that you said the USD is going to be stronger against the Euro market, and then the market is going down, you're going to make money with the market going down because you said the market was going to go down. Does that make sense to y'all? I try to explain it as simple as possible. You're basically saying the market will go up or down against two currencies. So there are multiple pairs of currencies, but I like to use the Euro versus USD, for example, as far as explaining how the Forex market works. So people kind of understand, you know, has a good understanding of how it works. Okay, cool. So I'm going to actually show you how the market looks so we can kind of give an example on, what I mean by, the market going up or down. Let me know if y'all can see my screen. Let me check YouTube, see if YouTube can see my screen also. Okay, cool. All right, cool. All right, guys. So, oops. Let's look at the charts. Now, as you can see, guys, the market is going up and the market is going down. So right here is going up. Right here is going down. Just so you can understand what I mean. So let's say this is a Euro versus USD. Whatever pair is first is when the market is going up. Whatever pair is second means the market is going down. So if it's Euro versus USD, when the market is going down, it means the USA currency is getting stronger against the euros. When the market is going up, it means the euro's currency is getting stronger against USA because why? Euro is the base price. So whenever the market goes down against the USA, that means that, whenever the euro gets weaker against the USA, that means the market is going down. And the market is going down against the USA, that means the market for USA is getting stronger than the euros and vice versa if it's going up. So let's say, for example purposes, that you're in USA, we're all in the United States, and we decide we want to take the trip to Europe today. And we have $1,000 in our account. We take $1,000 with us. So when you go to Europe, you have to exchange your currency for their currency. So let's say you exchange your $1,000 for $1,000 worth of euros. So let's say that you go out to Europe, you're enjoying yourself, and let's say that you don't spend much money. Let's say you keep your entire $1,000. And let's say when you went to Europe, the market was right here. And let's say that when you came back from Europe and you're about to exchange your currency back to USA dollars, that the market is somewhere up here. That means that if the market was right here and it went up, since it went up, that means the current exchange went up, and it means the euros went up in value. Why? Because the euro, whenever the market goes up, the euros are going up. I mean, the value of the euros is going up. So that means that if the value of euros is went up, then what does that mean for the USA dollar? The value went down. So when you exchange your currency, the euros, back for that same 1,000 euros, you exchange it back for USA dollars, you'll probably get about like $800 or $700 or $850 or $900. You get back less than you originally had. Why? Because of the value of the USA market decreased between the time that you left and the time that you came back. Does that make sense? I just want y'all to understand how it works. So when you're going out the country, you're exchanging your currency, you understand why you're getting less money or more money back. Cool. Let me see if everyone understands on here, on YouTube also. Okay, cool. Cool. Yeah, use that chat and oh yeah, you're on YouTube, make sure you're liking and subscribing so we can get more people seeing this video. So hit like if you're liking the information we got so far. And thank you for your participation. So now this is the same concept, except if you're trying to trade, that's basically what trading is. But you don't want to keep going from USA, holding your money in Europe, hoping that the market goes up or down, and then leaving when it's convenient for you. You agree that that's probably a lot of work, but what you can do in the Forex market is you can just place a trade right here. So it's like exchanging your currency, and then once the market goes in the direction that you want, you can pull out and make your profits. So if you had $1,000 and let's say the market went up and you pulled out right here somewhere, and let's say that now you made $200, you can pull out. Now you have $1,200 in your account. So I'm going to explain how that works just in case that confused you. No worries. I just want you to understand why that happens. So you have to pretty much understand if the market will go up or down. So I'm going to teach you two techniques to figure out which direction the market is going to go. I'm also going to teach you how to understand how the money works, like how do you create your profits. And I'm also going to teach you how we have professionals. I have professionals trading my account that are making me money in the market without me doing any work. And I have professionals sending me signals on what kind of trades to take. So we're going to go over all of that. I'm going to tell you how to turn $100 into $28,000. Just stay until the end of the webinar. Like, if you're on YouTube, hit the like button. Also subscribe. And, you can share this on Facebook or YouTube, Facebook or whatever, or any social media. None of those get on. But I'm going to go over all of that. So let's say we're looking at the market right here. And we're looking at the market. I don't see anything worth looking at yet. So we're looking at the market. It's going down. I'm actually going to make this bigger so we can see it better. So let's say we're going down. Then the market's going up. Then the market's going down. Then the market's going up. Now, what I see that's important to me is not the direction of the market going down and up like this, but imagine this line is not right here. So what I see is that every time the market tries to reach this point, it turns back around. So it went down, up, then it hit right here. So that's telling me that there's a good chance that's going to turn. Next time it reaches this point again, it's going to turn around. Just so you can see another example without the line being there, if you look at this market right here, this area right here, every time the market goes up, it hits this point, turns around, 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 and then it finally just breaks through. It's kind of like a ceiling. So eventually, if you keep hitting that ceiling over and over, eventually it's gonna there's a good chance that it's gonna break. But you've made a lot of money in between these trades, and I'm gonna explain how that works. But let's kind of go back to this example. So we see the market going all the way down, and let's see it goes back up. So basically what I'm looking for is the next time the market hits around this area, I'm gonna say the market's gonna go down. So when the market is going down, the terminology for that is a sell or short. And when the market is going up, the terminology for that is a buy or long. So when I want the market to go up, what am I gonna do? Is when the market is going up, is that a buy or a sell? And when the market is going down, when the market is going up, is that a buy or a sell? I just want to make sure y'all been paying attention. When the market is going up, is that a buy or a sell? Okay, cool. Buy is long. Good. So That's a really easy terminology. So now, the way I like to explain, now that you understand why it's gonna go, we're gonna look at one real quick. So remember, when it reaches a certain point over and over, we're trying to figure out which direction the market is gonna go. So I'm gonna pick out a point in the market where I see a repetition or a trend, and I want you to tell me is the market gonna go up or down based off what all the information that I just taught you. So we go on right here. We're gonna put the trade right here. Let's see. This is the line I put. So the reason I put this line is because every time the market reaches here, it turns around. So when the market reaches right here, from here, this is where the market currently is. When it reaches right here, am I going to do a buy or a sell? When the market reaches here, so it's currently right here as it's going down, am I going to do a buy or a sell once it reaches this point in the market? Exactly. Good, good, good. That means that you're saying the market is going to be a buy. Cool, 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 cool. And so exactly. And if you're having a hard time seeing this, a lot of people, I saw one person say they can't see. You have to download the app Zoom and then join if you're on your phone, so you can actually see what we're talking about. If you're listening on your phone, you're not gonna be able to see me obviously because I'm on the phone. I mean, you're on the phone, but if you download the app and watch on the app, you can see. People on the computer, you automatically can see. So now I want you to understand. Okay, we understand which way the market's gonna go up or down. And I'm gonna teach you some more techniques because this is not the only confirmation. There are multiple ways to find out which way. And you don't want to just use one way to figure it out because it might look like a confirmation, but if you got multiple confirmations telling you which direction the market is going to go, that increases your chances. Now, this is what most people will do. If you don't know what you're doing, you're not educated, even about support and resist. Let's say the market is going down, you're just going to think you're going to put a sell right here, thinking the market is going to go down when it most likely is not, and it's going to go run right through. It's going to turn around, and you're going to be wondering what's going on. So how to determine how much money you're making in the market. Let's say that, for example purposes, I'm not saying this split it is. Let's say that from this point and down, the market went down 20 pips. And so what pips are is basically, let's say that if I'm running, you ask me, Brandon, how far did you run today? I say I ran 5 miles. Well, Brandon, how far did you run today? I said I ran 10 miles. So the reason you know how far I went is not because I said I was running, but because I told you how many miles I ran. So the way you could determine how much money you're making in the market or how you could tell someone how far a market went down or up is by using the terminology pips. So it's not to overcomplicate it. You either went down in pips, a certain amount of pips, or you went up a certain amount of pips. So you either went up 20 pips, 30 pips, 100 pips, or you went down 20 pips, 30 pips, 50 pips. So does that make sense? So if I say, hey, man, I just went down 20 pips before when I took myself out the market, would that have made sense to you now? By saying, oh yeah, the market went down 20 pips, or the market went down 30 pips before I pulled out my trade. Does that make sense to y'all? I just don't want to confuse anyone. I want to make sure everyone's following me. Remember, that's just terminology, so don't overthink it. It's like if I ran 10 miles, then I ran 10 miles. Is this so you can know how far I went? I had to say 10 miles. I couldn't just say I ran a long way. I had to tell you how far by giving you a unit of measurement, basically. How to join Zoom? Just watch it on YouTube. You're fine, man. I can see you talk regardless, so it's totally fine. You don't have to get on Zoom, Remy, and I can see everything that you see right here. So you're fine. You don't have to worry about it. I'll still be able to answer any questions that you have via Zoom or YouTube. Because remember, guys, I got people watching on YouTube, so I'm switching between YouTube and Zoom so I can see everybody. All right, so we understand that. Now, let's say that the market went down 20 pips right here. Well, before we even did our trade, we had to determine how much money we wanted to make. And we had to make several decisions right here. The first decision is the market going up or down before we place our trade? We know the market's going to go down, so I'm going to say sell. Now, I was also asking, what is my lot size? My lot size determines how much money I make per pip. So let's say that I wanted to make $2 a pip. Well, I'll put in a certain amount of lot size. Let's say I wanted to make $10 a pip. Well, I'll put a certain amount of lot size in. So let me show you what lot is real quick. As you can see, if you put in your lot size as 0.01, that means you're telling the market before you place your trade, you want to make 10 cents per pip. Let's say that you wanted to make $1 a pip. You would do you put in 0.10, which would make you $1 per pip. And if you want to make $10 a pip, you would do 1.00. See, most people who don't understand this, they'll put in 5.00 thinking that's $5, and they'll be making $50 a pip, and they'll be wondering what's going on. So just so I can test everyone, if I wanted to make $5 per pip, type in what would I put in. If 0.10 is $1 a pip, what would be $5 a pip? Exactly, zero. Let me see what else everyone else put. But you're correct. Whoever answered so far. Yes, Justin, correct. Correct. Cool. 0.50. So if you wanted to make $5 a pip in the market, you would do 0.50. So for example purposes, how do we, let's go back to the market. Let's go to the chart. And so let's say we place a trade right here. And it went down 20 pips. And we did $5 a pip. And we know based on putting another line right here that typically every time the market hits right here, it turns around. So we're going to take our trade out right here. So we made 20 pips going down. How much money did we just make if we did $5 a pip? Correct, $100. Now, if you had to place a trade right here, what would you do? A buy or sell? We're going to place another trade right here. We're doing buy or sell. Buy, exactly. We went up 20 pips. We're doing how much? $5 a pip. We're going to pull out right here because we see every time it goes around this area, it reverses. So we made another $100. So let's say we did another trade and we did a buy right here. A sell right here. And we pulled out at this point. Let's say this is 20 pips. We made another $100. So let's say, for example, this is how it works. Let's say that you started off with $1,000 in your account, for example, $1,000. And let's say that you took your trade right here and it went down 20 pips and you pulled out. How much money do you have in your account now? If it went down 20 pips at $5 a pip, you had $1,000 in your account, you took your trade out, how much is in your account now? $1,100, exactly. So now the market is going up right here and you pull out again, now how much is your account? Exactly. It's another $100, so that's $1,200. And then you know the market's going down one more time, now your account went from $1,000 to $1,300. So just to let you know, imagine if, let's say you start with a $100 account, and instead of you doing 50 cents a pip, you do like 10 cents. You can even do 50 cents a pip, but that's I wouldn't start off at 50 cents with $100. I'd do like 10 to 20 cents a pip. Definitely you're new. And let's say that you make $10, $20 a day. And so in 3 days, now your account is at $200. Now you have a $200 account. And let's say in another 2 days, you do another $100 in your account. So now you have $300 in your account. So now you can do maybe 40 cents a pip. And then let's say you build your account up to $700. Now you have $700 in your account. Now you can do 50 cents a pip. And let's say you have 1,000 in your account. And now you can do 60, 70 cents a pip. And let's say next thing you know, you keep doing that. And you keep on just building your account. So you don't have to start off with $1 billion. You can do slow risk management and build your account up. Make $20 today. Make $50 today. Now your account is $150. Now you keep building your account. Next thing you know, by next week or two, you have a $400 or $500 account, and now you can trade bigger lot sizes. Does that make sense so far? Okay, cool. I'm gonna teach you another confirmation. So one confirmation is support and resist. So another confirmation is looking at the candlesticks. So a lot of people want to know what do these candlesticks mean. So depending on what, you can choose what time of day that you want these candlesticks to mean. So for example, let's say I want to see how far the market went up and down over the course of a day. Then if I pick the day chart, every candlestick means a day. So throughout one day, it went down this much. Then Tuesday it went down this much. And then Wednesday it went up this much. And then Thursday it went up this much. But let's say that I wanted to see what will happen in every 5 minutes. That's what I'm trying. Let's say I'm trying to make quick trades and get out. Well, I can't look at the day chart if I'm trying to make quick trades, right? So let's say I look at the 5 or 10-minute chart, or 15-minute chart, or 30-minute chart. So let's say it was a 5-minute chart. That means that this would have happened in 5 minutes. And if let's say that I did the 10-minute chart. All that means is that instead this entire bar would be 1 bar in 10 minutes because this happened in 5 and this happened in 5. So in the 10-minute chart, this would be 1 bar going down. Does that make sense? Because the 10-minute chart is showing both 5 minutes and how far where the market went in 10 minutes versus how far the market went in 5 minutes. So it's going up or down. Now I'm going to show a diagram. So the bar means where the market closed and where the market opened. So let's say that it's a buy. Let's say the market's going up. That means the market started right here and then it went up. And by the way, green and red just means that green means market going up, red means market went down. You can change the colors that you want. Everyone has their preference. But we're just for example purposes, we're going to say green is up, red is down. So the market opened right here and it closed right here. That's all that means. So that means like in 5 minutes, that's how far the market went up. But this little, who knows what this candle wick, who knows what this little line means right here? Who knows what this is called? Who don't and who does? I just want to see who knows a little bit about the Forex market and who don't. Who knows what this line right here means? Exactly, the wick. Cool, cool. So you know a little bit, you know about the Forex market. So that's perfect. So basically what the wick means, guys, is how far the market went down before it closed. So let's say, for example, the market it started right here and it went up all the way up here. But then at 5 minutes, let's say this is the 5-minute chart, it closed right here. So it went all the way up here within that 5 minutes, but by the time it finished, it stopped right here. Does that make sense to y'all? Okay, cool, cool. So I'm going to teach you a strategy, just a really simple strategy. I'm not going to go into great details, just one other strategy. And like I said, multiple confirmations. That's why you want to learn multiple confirmations so you can understand where the market is going to go. So I like to call this the pin bar. So basically what that means is that when you're looking at the market, you just got to talk to yourself. So when I'm looking at this, I see the market is going up. It's pushing up big. It's hardly any wick. It's pushing up big. It's going up. It's going up. It's going up. And then I see it trying to go up all the way right here. But then it stopped right here. What does that tell me? That's telling me that there are a bunch of buyers coming in the market, buying the market up. And then at this point, even though they had huge momentum, somehow the sellers came in and they tried to go up some more, but the sellers came in and pushed them down. And it pushed them down, and it pushed them down right here. So what that's like, I like to use it like an example. Let's say an elephant is running fast. Look at this momentum. Look at these huge bars. Let's say the elephant is running really fast, right? And it's going really fast. Do you agree if an elephant is running really fast that it's going to take a lot of momentum to make that elephant slow down, for something to slow that elephant down, like get in front of the elephant? So what it's telling me is that, dang, you know what? They had all this momentum, but even though they had all the momentum, the market, they pushed this momentum down a little bit. So it's telling me, you know what? That means that the sellers are probably going to get in the market. So the direction I would say is, you know what? It's probably going to be a sell, right? But let's say that you don't want to use that confirmation only. You want 2 confirmations. So remember, if you see it happen twice, that means there's a good chance the market's going to go down. So this is what I would do. I would watch this and I would see, okay, I would watch this one more time. Say, man, you know what? They trying to push this market down. So I would wait. I want to take my trade right here. So then they took the trade down. I could have made money. I could have said, sell. Because remember, we said that it took a lot of force. So if a lot of force made them turn around, you could have did a sell and made a lot of money going down. But let's say you're going to be safe. So we'll wait for the market. And let's say the market goes back up again. It's pushing again. But we notice again that in the same point, the market is pushing up. But the sellers pushed it all the way down in the same point. So not only is the wick super long, but they stopped right here, but also I have support and resist. So I have 2 confirmations telling me, man, the sellers do not want to get past this point, because every time they get to this point, they push back down. So what do? They drive it all the way back down this way. And this way, if I hit a sell right here, I would have made all of this money going down. Does that make sense so far? Because I used 2 confirmations versus 1. Making sense so far? Cool, cool, cool. So that's, there's a lot of different ways, lots of confirmations. So I got a question for y'all. Who would like for someone who is professional to tell you when to trade in the market? Just text you, like, look, go take this trade. And do you make money? You don't have to look at the market. You don't have to know anything about the market. They say, hey, take this trade, and we're going to get you a part of that market. We're going to get you to take profit in that market. Well, the company I'm part of, they do a lot of different things, guys. And I'm going to tell you how to get started with this company if you're interested. But wait to join with us after this webinar. Give me some time. I'm going to tell you exactly how to get started, because I know a lot of people will be, how do I join? Just watch the entire webinar first, and then I'm going to tell you exactly how to join with us. So, as you can see, imagine you're getting a message like this, and it's saying, hey, decline or accept the trade. And if you accept that trade, it's going to tell you exactly what trade to take, when to take it, where and where to take your profit. Would that seem like value to you? If you can make $100, $200, $300, $10, just taking the trade that someone told you to take? So now, another thing the company offers, guys, is something called a fusion trader. And basically what the fusion trader does is, imagine, instead of you trading your account, a professional said, hey, I've been making a lot of money in the Forex market. So every time, oh yeah, you definitely use swap trades. It's dope. But the next thing is, you definitely use fusion trader also. Fusion trader is dope. Now imagine this, guys. Imagine a professional comes to you and say, hey, Brandon, or comes to me and say, hey, Brandon, I've been making a lot of money in Forex, and I decided, you know what? Every time I place my trades, it's going to place your trades for you based off the lot size you choose. So you don't have to use the same lot size, because I'm rich. I might be doing $100 a pip, but you can do the same trades I'm doing, and it's going to automatically do it for me. And every time I place my trade, or every time they place their trade, it's going to take my trade for me. So when they make money, I make money. Who would like something like that? Exactly. Easy money. Easy money, right? So this company also, I'm going to show you an example. This company took this lady's account at $3,000, and over the course of 30 days, they just kept taking trades, and it took her account to $1,791 in profit, which was $4,846 made in the market. And it took her account from $3,000 to $4,846. Yeah, I'll just hit me up with my email, and I'll do a one-on-one call with you. Actually, I can. I wish I could show you on this computer. I'm doing the webinar. I'm actually out of town in North Carolina. But just, if you want to get in contact with me, just message me directly. I'll tell you how to get in contact with me and everything. But let me just finish this webinar so we can kind of show everyone all the different products. Is that cool, Kevin? Cool. But I'll kind of give you my personal testimony. That's actually cool. I'll give you one of my personal testimonies. So I always start a new broker account based off of different situations. So one of my broker accounts, I just started a brand new broker account for the auto trader specifically. So basically, I set it up. It took me 5 minutes. In 24 hours, I had my account set up. And so I was drinking at a party, and I opened the account that I set up with them, and they took a trade. And when I woke up after the party, they had made me $90 off of 60 cents per pip. And it's funny. It's a funny story. I accidentally meant to put $6 per pip, but I put 60 cents per pip. So but I was drinking, so that's why drinking is not always great. But long story of my life, I did 60 cents a pip. I made $90. If I had that $6 a pip because I wasn't drinking and they traded my account for me, I would have made $900 instead of $90 from doing nothing, just setting my account up. Now, I recommend, when you're using this, you do like 20 cents, 30 cents, 50 cents, $1 a pip, and just let them trade your money for you, because you're not doing it's like free money. Imagine you making $100 a day or $50 a day doing nothing, and you can have a second account to trade for yourself. Now, I'm actually going to show you how it actually looks also. So let's go to it really quick. So this is the fusion trader. And it's basically you get this once you join the company, and you can choose. You can go to my accounts once you join, and you can choose not even my accounts. I'm just gonna go to this instead because I want to show you. I want to show you this actually. You can choose who you want to trade your account. So you can look at their past history, you know, what they've done, how many pips they've gained in the past week or two or whatever. It's the highest package, but I'll go over that soon. I'll go over that. Let me finish showing the rest of the webinar, and then I'm gonna answer any questions for everybody. Because I want to be able to go over everything, so when people ask questions, I don't have to repeat myself. Because some people don't know exactly what everything is yet. If that makes sense. It's funny because your name says Samsung Galaxy S7, but I'm pretty sure you have a real name. But so you can choose who you want, and literally you can see their past trades, and see what they've done, and you can choose. Okay, you know what? I like what they've done in the past, so I want them to trade my account. But let's say that you're not really sure about putting your real money with them. You can actually do a demo account with them. And you can see, I just demoed, you know, 3 or 4 people to see which one I like the best. So I let one demo my account for like 3 weeks. I'm not 3 weeks, 3 days. And then I did, okay, that was random, Kevin. And then I had another person do I had another person try it out on my demo account. And I'm like, okay, dang, they did really good with the demo account. I'm gonna use this person with my real money because I like this person. So that's why I like the fusion trade, because you don't have to, you can choose, you can figure out who you like by using demo money. So you don't have to just kind of guess like who's better and who's not. You can look at the stats. You can look at, you know, you can try with a demo account first, see what they do with your demo account, and then take it to a real account and just have free money just coming in. Now, another thing that you get is I like the person, you know, I like that I can learn how to trade myself. So they literally have education, basics 1 through 4, where you can get the basic education. They have advanced training, and it's all pre-recorded. You can go at your own pace. You don't have to worry about, you know, someone speaking too fast. Like I know I speak fast, so sometimes, you know, you might miss something I say, but you can go back and watch these professional videos. Yeah, I'm glad you like the training they got. It's some really good training, and it's really like a lot of value, and it's a lot of training. But some people, I understand, you know, they like that. They like live trainings like this, and I do too. But I like the best of both worlds. Why get one? Why have to choose? You can have both. So they also, outside of all the pre-recorded training, they have something called the IML TV. So you can choose what day and time that they're going to do different trainings, and you can just scroll down based off of So let's say that you want to do Forex 101 or Forex basics. You want to learn the basis of the basis of Forex. But on Sunday at 8 p.m., Christopher Derrick is going over that. So I would go down here at 8 p.m. Eastern time, and I would just hit watch now. And of course, it's not probably going to be anything right now because it's not, you know, it's live, so it's not going to be on right now. But if you want to watch his recordings, you can also click their recordings and watch those. Now, another thing that they have, guys, is something called the harmonic scanner. Now, I love the harmonic scanner because it tells me when I can trade in the market, when I can take my profit, and where I can do my stop loss. So I'm going to teach y'all about the stop loss and the take profit and the entry. So the market is going up or down. So let's say that you're wrong about the direction of the market. So the reason that it can be risky is because let's say that you did $5 a pip, and let's say that you're going the right direction. Let's say you go 20 pips the right direction. That means that you made $100. Let's say you go 20 pips the wrong direction. That means you're negative $100. But the way to stop that is, and that's why I said Forex market is not risky, is that you're risky, not Forex market. You're risky because you can control how much money you lose. So let's say that I know I want to make $100, 20 pips. So, but I'm willing to risk $20. So I'll put a stop loss right here. This is a stop loss. Let's say I take my trade right here, and I put a stop loss right here. And let's say that the market goes the wrong direction. It pulled me out my trade at $20. So I've lost $20, and I can re-look at the trade and make the trade again, and then do the trade and then do the right direction and make my $100 or $120 and get my $20 back also. Versus hoping that the market's going to turn around, losing $100 because you didn't put a stop loss, trying to be greedy and let your emotions get involved with common sense. Does that make sense to y'all? Cool. Good stuff so far? So let me go back. So what I like about the harmonic scanner, guys, is it pretty much marks up the charts for me also. So a lot of things I do is I look at the harmonic scanner and I look at I look at it based off what their analysis is. They mark the charts up for me. And I say, you know what? This is a good markup. I kind of like what they're doing here. So I'm going to take the trade. But let's say that I don't feel like waiting for this trade to happen. Well, they tell you the entry, the take profit, and stop loss. So basically what the entry is that that's where you want to enter into the market. So let's say that you put your entry in and let's say that right now they got entry and it's telling us to do a sell. So let's say I put my trade in my phone and I say I want to sell, but not yet. So I'll put in sales, I'll put in a sell limit, for example. Let's say I put a sell limit in. And let's say I put a sell limit in and I put this entry in. That's basically telling the market, once it hits this entry, take the trade. Don't take the trade right here, but once it goes up and hits my entry point, take my trade. Now that's my entry point. What my take profit is that if I'm asleep or at the beach or at the bank and I'm not paying attention to it hitting my entry point, I want it to take me out of profit right here like the harmonic scanner is telling me to do. So I'll put in the take profit numbers also. And just in case the harmonic scanner is wrong, I'm going to do my stop loss the way the harmonic scanner told me to do it. So let's say I'm asleep and let's say it goes in the direction I want. I'm asleep and it goes up here, it takes the profit and pulls out right here. I make money. Let's say that I'm asleep and it goes right here and pulls me out that stop loss. Now I lost money, but I lost minimum money versus a lot of money. Because imagine you sleep without a stop loss and it goes the wrong direction and you sleep. And it's just going the wrong direction the entire time. There's no stopping you. It's 300 pips in and it's just eating up all your money because you had no stop loss. I know people who've done that because they didn't know a stop loss existed and they fell asleep. And I don't think you should be trading the market if you don't know what a stop loss is. Like you shouldn't be even trading yet. When you wake up, you're gonna be pretty pissed. So stop. That's why I said Forex is not risky. You're risky. Yes, it does. It keeps scanning the market over and over. It's real time, as you see right here. But I always tell people Forex is not risky. You're risky. Why are you risky? Because if you're not trying to become educated, you're risky. If you're not trying to understand multiple confirmations, you're risky. If you're not setting stop losses and take profits, you're risky. You're risky, not Forex. So taking advantage of education, taking advantage of stuff like the harmonic scanner, taking advantage of the swipe trade, allowing someone to trade your money for you while you're learning is also great. But joining there, not knowing anything, is risky. It's gambling. You're a risk. But once you become educated, you're a professional. It's no longer a risk. The only person that you go, if you take a lot of trades and you keep taking a lot of trades, you're always going to have more wins than losses. Or if you have more losses than wins, it's going to be big wins because you're only going for big wins to begin with. So you have 10 losses and one big win, and you're $2,000 in profit or $1,000 or $5,000 in profit, you're still great. Versus you have one big loss because you didn't pick a stop loss or you got too emotional and you want the market to turn around because you didn't even pay attention and you didn't do multiple confirmations. Sometimes when the market goes the wrong direction, I stop the trade, lose my money, I re-look at it, and I say, you know what? The market's about to go the opposite direction. But I'll wait to see I wait to see multiple confirmations. I don't just click the opposite button. Multiple confirmations. So how do you get all these products? It's very simple, guys. So the company called IML, and they give you all these services, everything. I don't know about y'all, but this is a lot of value. And like you can literally make $100 a day just trading with the people live on iMarkets Live TV right here. You can literally make $100. You can make $400 or $500 a week just trading what the harmonic scans you to do. You can literally make a lot of money just doing what the swipe trades tell you to do. You can literally make a lot of money just having someone trade your money for you. So it's a lot of opportunity. And you can literally make even more money, the most money you can ever make, by just learning it yourself between the pre-record training and the iMarkets Live TV. There's no one's gonna make you more profit than yourself. And that's a fact. If you become a better person, become a better trader. Don't give up on because it looks hard or you lost a couple of trades. Go into the demo account and learn. Get in this and keep watching it over and over. Understand multiple confirmations and become the trader that you want to be. You only have to learn a couple of confirmations because once you learn 4 or 5 confirmations, let's say that you only learn 4 or 5 confirmations And that means you only trade on those confirmations. You'll always make money almost all the time because you're not trying to trade a million confirmations. You choose 4 or 5 that you like, and you just make money for the rest of your life with those 4 or 5 confirmations. I showed you 2. Let's say you add 3 more, and those are your 5 confirmations. That's how you're going to be a trader. You're not doing anything else. Does that make sense to y'all? Yes, you can, Justin. You can take multiple take profits with the harmonic scanner also. So, how much does it cost? Round of applause. Okay, so if you want to get started with us now, you could join us, our referral link, and you could be a part of our community. If someone referred you to this video, contact them and first hit them up. But if you came by yourself, then you can join under us. And it's $235 one time and $185 a month for all the services. I'll tell you about the other one. It's $195 one time and $145 a month. But I don't like that one because you don't get the auto trader and the swap trades. And I feel like for an extra $35, you might as well get the auto trader because it's going to be trading your money for you. And you're going to make way more than $35 off the auto trader alone. So I just go off of $235 one time and $185 a month. And you're really going to make more money off the auto trader trading your money. You might make that $185 in 2 or 3 days from just the auto trader alone. You're definitely going to make that in a week. But you also, if you want to waive that $185 a month, let's say you want to waive and you don't want to pay it no more, they have a referral program where you can refer 2 people one time, not per month, one time. Let's say you got 2 people that want to take advantage of the services. They'll waive your monthly membership for good. So you no longer have to pay the $185 a month if you refer 2 people. You get your own personal referral link once you get started. So you pay the initial $235. I say 2 weeks later, you show some friends that the auto trader made you some money. Let's say some friends that you learned some new stuff and you've been using the harmonic scanner or the swipe trades, or you're just using the live education and they want to get started. You refer them to your link. You got 2 friends, then your membership is free. They do the same thing, then you're making money. Oh, thank you, Mark. We're really good. I try. Well, there's no specific time you have to get those people. So for example, let's say that you join today and you get those 2 people before 30 days, then you don't have to pay. You pay every 30 days. So if you get those 2 before the next 30 days, your membership is free. Let's say you don't. Let's say you get 1 person, and in 30 days you pay your membership fee, and then you get 1 more person. Again, that's 2 people. Then the next membership you don't have to pay because now you got your 2 people overall. So if it takes you a month or a year, as long as you bring in 2 people, your membership is free. No problem. So and they also, this is completely optional. You don't have to do this. I like to tell, because a lot of people don't like to refer people, which is totally fine. I like to refer people, but everyone doesn't. But if you decide you want to refer more than just 2 people, if you refer 12 people that can subscribe as customers to the education platform, then they'll pay you $600 every month for the same 12 customers. So you can use that $600 for bills. You can use that $600 for vacation money. You can use that $600 to fund your Forex account, which I recommend. Like I know a lot of people that make $10,000 a month from the referral side, and what they do is they at least put $2,000 or $3,000 of that money into their auto trader, so they can trade the people who trade the money for them, and their money is just growing. So instead of throwing it into their savings account, they throw it into their broker's account with their auto trader, with their money, making money for them. So if you're making $600 a month, if you don't need that $600 a month right away, just throw it into your auto trader and just keep growing your account, and they just boosting your account and it's making you money versus putting in your savings account, and that's not making you any money at all. So if you want to get started with us, we got a full trainings. We do a lot for our team, and it makes sense to you. If it makes sense, just do it. The thing is, when's the last time you spent $235 and someone's going to do all the work for you, going to teach you how to do the work for yourself? Because I'm like this. This is the only company. You ever heard the saying, if you feed a man to fish, he eat for a day, but if you teach a man how to fish, he eat for a lifetime? Who's ever heard that saying? Well, the saying is a little different for us in IML. If you feed a man to fish, he still eats for a lifetime, because why? The auto trader is going to do all the work for you. And we teach a man how to fish, or a woman, they can also eat for a lifetime. So we're going to teach you, and they're going to be doing the work for you on the auto trader side. So it's a little different for us. That's why we're cool. But yeah, it's really dope, guys. I really love this company. It's a lot of people. I've helped a lot of people get started with this. I've helped people make money on the trading side. I've helped people make money on the referral side. I've helped people make money on both. Some people come in, they want to just refer people and use the product. Some people don't want to refer anyone, or at least refer enough people to get their membership free. Some people, they got dreams and goals where they want to make $100,000 a month just trading the Forex market. Then we got people who got dreams and goals who want to make $100,000 a month from the referral side. Then we got people like me who want both. Click that get started button, and pick the Platinum Plus package, and we're gonna get your email and your contact information. And what we're gonna contact you, and we're gonna just make sure that you answer your email, your number, and we're gonna text you or call you or get in contact with you and plug you into our personal Facebook group, our chat, plug you into our trainings, plug you into fixing everything up, and just making sure that you get everything that you need so you can come in here major and just win. So I hope that you guys enjoyed the webinar. Did I break down everything pretty simple? I think I pride myself of being able to break down something that seems complex, and I make it extremely simple to understand. Like, I don't get into crazy terminology. I don't start doing the most. I make it, well, I just showed you 2 confirmations that you can use where you can just actually make money and just use those 2 confirmations even without joining and just, do something. Do y'all agree that at least, I'm pretty good at explaining, how things work on a broken down simplicity level? Thank you, Justin, for saying that more clear. Also, thank you, everyone, for staying on this webinar and, taking advantage of all the information that I had to offer you. I'm looking forward to people who like this vision and see what's going on to get started with us, because I want to work with you guys. I want to make a lot of money in the trading side. I want to make money. I want to become the next Wolf of Wall Street, but I also want to make money on the referral side, turning people on to something that can completely change their life forever. I'm looking forward to working with you guys.